He says that Bruce Akamizu is the head for the Japan Bullion Market Association and that he is hearing a short squeeze in silver. Is there any silver in London? Short-term loan rates have gone through the roof, rising by 20 to 30% if you can find a lender. There is a silver squeeze going on, and now the rent for silver is much higher than any other metal. There is a squeeze, and it's happening all over the world. Again, this is Eric Young. Robert Gottlieb said, over-the-counter silver is going to ETFs and India demand. This means that there isn't much free-floating silver left. He also said that this is the first time he had ever read Gottlieb write that there isn't much free-floating silver left. Robert Gottlieb used to work for JP Morgan Bullion Bank. I think this is the biggest gold seller in the world. The JP Morgan Bullion Vault is right next to the Federal Reserve. Some people think there's a path between them and other things. It has the same number of stories below ground. That's for a reason. That's where rock starts to show up. But my friend Dana Samuelson is a great person. Robert, why are lease rates so high when factories are stuck for weeks because they have too many applications? It looks like there are a lot of physical, or are there just not enough 1,000-ounce bars to go around? Robert replied, OTC silver is going to ETFs and India demand. There isn't much free-floating silver left. The stuff that is in vaults, like at the London Bullion Exchange, or that can be delivered is called free float. It's all gone. That is what he says. But I want to draw your attention to something very interesting in Dana's question. It's been weeks since too many things were sent to the plants, he says. There is a lot of mine stock coming to the market in the form of bars that aren't pure enough to go to the refineries. But the ports are now where things get backed up. Since they can't work with any more silver, they can't meet any more needs. And that means there is more pressure on prices to go up as long as there is more real demand. The price of silver has to go up if they can't process it fast enough to meet demand. In fact, this is very good. It's been weeks since the processors could handle new silver. So it's not that there's a lot of silver around. There may be a lot of actual Dora bars of impurity silver that can't be sold on the retail market. To get them through a refinery, they are poured into 1,000-ounce bars, which are the source. These bars are then melted down to make coins, 10-ounce and 1-ounce bars, and other things out of silver. They also make bars that are 100 ounces. Because of this choke point, they can't buy all that metal or any of the other goods that stores want to. Hansa Cherney says there was a huge drop in London silver free float and an ideally timed paper dump. That was on October 7th. That day silver fell. The September stats from LBMA were just released, and they're interesting. In other words, you have to act like everything is fine when 888 tons go missing. The borrowing fee for SLVI shares in the Silver Trust is now almost 12%, up from 8% on October 8th from Make Gold Great. There are still 0 silver SLV shares left to borrow, and the borrowing fee keeps going up. 12.34% for those shorts that are really scared. I want to make it clear that if you're short, the price going up hurts you a lot. The pain keeps getting worse, and it's now being used against you. In this case, they're being pushed from two sides. If you borrow money, the fee is usually around 0.5% to 1.5%. But lately, it's been going up, and now it's up to 2.5%. On top of that, they're losing money because they're selling shares that they don't own. Where do they get these shares that they're short on? They do not own them. They lend and sell them. It's their broker's house that they borrow them from. How does the company get them? They don't have a lot of shares that they can lend to anyone with a trader's account that can use credit. The trading firm can take your shares without telling you. So even if you think you own a star share of stock or some SLV or GLD, the truth is that you bought and sold your shares on the market. They owe you money. They should get their money back. Short sellers, on the other hand, are now losing money because prices are going up and having to pay interest on top of that. It's going to be really cool. But what you see here is candle after candle that is going up with higher and higher ends. This may be a trend that will continue, Tim Hack. If quotes interrupt stops don't work for short sellers, I think the paper market is actually beginning to fall apart. This means that when they set a stop, the quotes stop working. If there's a gap up and the short seller has reduced their losses, the price can skip that stop and keep going up. It stopped for 15 minutes straight from Monco64IG.com. It said that the gold banks in London had stopped giving quotes. It's back on, but cracks are beginning to show from TF Metals report Turd Ferguson also known as Craig Hemke. There may be a moment of true historical importance coming up soon. Spot silver is up $1.40, but the front month December 25th contract futures are only up 20 cents. This means that the backwardation is at an all-time high of $1.12. You may want to keep a close eye on this for the next few days. Now, backwardation means that you're paying more for delivery today than you would for delivery sometime in the future. This is where we are now. People want their silver now. That happened at 8:56 a.m. in just a few hours, on October 9th at 11:42. Bob Coleman reports that there is a $2.50 gap between the spot price of silver and the December futures price. That's how much it changed in that short time. Moving along, Han's attorney. If the Canadian Rare Metals Exchange and an authorized Royal Canadian Mint distributor are doing this, then it's okay. It could mean that there is something more serious going on in the trade of real precious metals across borders. He's retweeting it. A Canadian rare metals dealer named Mr. Yuppie has stopped sending any metals to the United States. What's going on now? This chart is mine. It seems odd. And the reason is that stock charts from January 18th, 1980 do not show current prices. The close are all they have. These are the facts they have. That means the open is 49/45. It got as high as 49.45. There is only one line because the low was 49.4945 and the close was 49.45. But this was the last high back I wanted to show you. So these are the close that people talked about in 1980. That's the high. According to Peter Spina, silver prices hit all-time highs in London, with a close of 49.68, beating the previous record high of 49.45 set in January 1980. This meant that silver was on track to break hourly record highs set on January 18th, 1980 at the Chicago Board of Trade. $52.80, so I made this map not long ago. This goes back to last Monday. And for people who don't know how to read these candles, the open is the fat part at the bottom of a hollow body candle like this one. The wicks that might stick out of both ends show the price action during the day as it goes up and down. Maybe not like this candle, and then the close are up on top of the body fat. A black candle. This was the open during the day, and the close are at the bottom. So Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, boom. Then something happened, and the price dropped a lot and stuck below. It's open. But the close were still more than what was sold the day before. So, from a finishing point of view, this is still going up. But I believe this is a shooting star. It's a bad sign. So, it's not really supposed to be a good sign. But since it closed above its old close, it doesn't matter because it's still a rise. And everyone who sees this screams manipulation. Yeah, I think I have some proof that it was in this case. I believe what took place. So Bob Coleman sent out a CME margin increase report, and COMEX raised the margin requirements for gold by 5.8% and silver by 9.3%. What I think took place is it opened and just started going, It might have fallen a little, but then it became like a rocket and took off. They told everyone about the change in margin standards. For those who hold futures, the spot price comes from the paper market. What does that mean for those people? Then, all of these people who are betting on the commodities exchange get a margin requirement, which is basically a margin call. They have positions with a lot of borrowed money. They need to come up with that money or sell some of their shares. That's why it puts pressure on sellers. So if they say it there, people will keep selling and then the market will close, and tomorrow won't have to be forced to close. The trading firm will do it for them if they haven't paid the money or sold some of their shares. They can keep whatever they need to keep though. This is the 45-year cup and handle that I was the first person to recognize along with everyone else. We were all paying attention to this cup and handle that happened from 2012 to 2024. Then I said that when it broke this resistance line, there would be a rocket move, and boy, has there been one from $25 to $49. It's very big. However, I meant to show you that I did my best. The up and down arrows can only move that blue line by 1 pixel at a time. So I did my best to get this on 494. 549. 32, which is as close to the overlap as I could get it. This line stopped at the pixel below this line, so it doesn't really cross. In any case, it shows that there's a small space there, and it looks like it touches. But this is a straight chart, so the percentage change stays the same. That means that each inch of space here is equal to the last inch of space in terms of percentage change. It also tends to make the numbers at the top smaller and the ones at the bottom bigger. Once you switch to a straight chart, the amount of change shown is always the same, not the percentage of change. This makes the bottom bigger, which makes the top bigger, and the amount changes all the time. You can now really see a gap there. As of now, we are well past the high point from 2011, and the only small gap left is a few pennies. We have also finished the 45-year cup and handle pattern that predicts triple-digit silver prices, and I think they will be in the mid-triple digits. Okay.